Hi, Clifford Bennett from Herston Economics. Those markets continue to just build nicely. I think we're going to see a very firm, strong week. I know I've said that other weeks, but certainly this time, it's pretty clear to everyone that could well be the case. The Australian market made good gains last week. It might have a day or two of consolidation, but certainly the risk is to the upside. The risk is not to the downside. Just some sideways price consolidation here, perhaps for the Australian equity market. Gold has probably bottomed for the year, so you better grab hold of as much gold as you can now, because I don't think we'll see these levels again the rest of this year, and that could be another 2 to 3 years out. So certainly grab hold of gold. Oil too is looking like it may well have bottomed. I'd be a little bit, I'm not quite 100% sure on that one, but I do think oil is probably bottoming and heading higher as well. The fundamentals for oil are out of this world. Now, one thing I do want to mention is people suggesting Reserve Bank actions, and I know a lot of people base their trading a little bit too much on the Reserve Bank, but my 2 cents worth is don't listen to all those confused people out there who seem to think that a national disaster is a reason to raise interest rates. Of course there's going to be food inflation, but people were already being hit with high utility prices. People were already hit with slowing retail sales. The domestic economy wasn't strong in the fourth quarter, and inflation was moderating, as Herston had said it would all year. So we're not going to have any cause for interest rate hikes until at least the second half of this year, because the Reserve Bank has to see straight through any inflationary effect from the Queensland floods. It's a disaster. People need help. They don't need to be hit with higher interest rates. So please don't listen to all those so-called respected other economists out there who is at the moment going on with this complete nonsense that, inflationary pressures, Reserve Bank has to hike rates. That's Excel spreadsheet stuff. It's not real world. Don't listen to it. So no rate hikes from the RBA in the first half of this year. Australian dollar's hesitating here, just under parity. It's built all that energy. I spoke of that last week. The Australian dollar's about to go to a new range. That new range is 1.01 to 1.03. So the Australian dollar is really about to take off. The euro, nothing can hold it back. It's incredibly bullish. Sterling's starting to have a run. I would again suggest watch sterling over the next couple of days. It's going to have a really sharp run to the upside. When it comes back to the Australian equity market, we're looking at a situation where the domestic economy needs nurturing. Surely the central bank can figure that out. No rate hikes. We're looking at a domestic economy where there's going to be massive government and private sector spending to rebuild infrastructure, not just in Queensland, but parts of New South Wales as well. We're looking at a global environment for the Australian economy that's never been better. So, Australian dollar, I still think 103 short term, 108 by the end of the year. That tells you what's going to happen with the Australian economy going through the second half. We can have a negative quarter in GDP this first quarter. Don't be scared off equity markets by that. The global power that's pushing us along is going to stay there. It's going to be a very strong year, no interest rate hikes, and financial markets, they're all taking off, bullish everything except the US dollar, which will continue to decline as they continue to print that money over there. Have a great day.